Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts.
Everyone, looking at USMJ, we got a whole bunch of names here: MedMen, IAN, IIPR, GWPH, TRUL, ACRG, GTII, KSHB, LHS, CVSI, and NBEV. So MedMen, we're going to start on weekly timeframes and zoom in from there. And the first thing I see when I look at the MedMen chart is a tightening weekly pattern. We have the low, the high of the initial bounce. We then had a higher low form on consolidation. And while we did break some resistance, it wasn't with any follow through. So we're still in a tightening range as far as I'm concerned. So we zoom into the daily time frame to get some more details of that. And we can see not only are we in that tightening pattern that we can see on the weekly, but it's even tighter than that. As on the daily here, we have $4 as a double bottom, and resistance is 434 and 451. So it's essentially a long drawn out equilibrium with a bull break that occurred. But again, this is where, as an analyst, that we have a little bit of wiggle room, and I call that a double top. So we have our low, high, higher low, double top, higher low, lower high, double bottom, and it's extremely tight with a break imminent. Slight favor to the bears just because it's an 11-cent break for a bear break. We need a 22-cent break for the start of a bull break. So that's going to give us some clear direction short term, either Monday or Tuesday, or I should say Tuesday or Wednesday this coming week, when we get a break of these levels. But it's all about $4 and then 346, or 434 and then 451. IAN, and I'm just going to be charting IAN from now on because the MPX deal has gone through in terms of being approved with the vote and then being approved by regulators. So MPX, until we actually have the merger of the shares being changed over, is going to trade at the hip with IAN. So IAN is also in a tightening range, but we're at a key resistance level that has not broken yet, so we may pull back from this level. 450 is that support. Resistance is 648, the top of the bounce. Pulled back for a higher low at 475. Unable to break resistance, so it is a weekly equilibrium here as well. And it looks very similar to MedMen, the only difference being MedMen has already started to pull back a little bit from its inability to break resistance, and IAN has not really started to pull back from that just yet. If they were the same, IAN would be roughly in the 560s or so. So on the daily time frame, for more details, we can see a solid day on Friday. Not a lot of volume behind it, though. We always want to see that bull volume if we're going to see any kind of key break of resistance. But early next week, it's going to get interesting because Tuesday or Wednesday, we're going to look for a break of 643 and 648. And if we don't get that break, then the bears are going to keep control. So right now, the most important support, and I shouldn't say the bears aren't going to keep control because they don't really have control if you look at the last 3 weeks, but they're going to keep the price from being able to break resistance. So the most important support is 572, a little double bottom from Wednesday and Thursday, and the most important resistance is our double top. And here we are with the bulls headed that way. Let's see if they can test that resistance early this coming week. And if we can get over 648 and then 662, we have a lack of resistance nearby, but the bulls are going to have to see some volume spikes. We want to see the kind of days where we have 350,000 shares traded as opposed to 150, which is what we saw on Friday. IIPR is looking up at that all-time high. Still doesn't have it just yet. You can see 55.63, and we got up to 55.60. So tight here on the daily as well. Let's just zoom back to the weekly for a second to see that it is a very clear uptrend. Higher lows and higher highs, bulls just fine. We don't have that higher high just yet. If we cannot get over 55.63 this coming week, we may have to pull back and form another weekly higher low, as we are a bit extended going from 42 straight up to 55. That's a very solid 28% bull move to get to those levels. So if we pull back on the daily, we will just be looking for a weekly higher low. So the most important range for me is the daily higher low of support of 5160. If 5160 breaks, we know weekly consolidation is underway and we'll have to form a higher low. If the bulls break and get that all-time high, obviously that's a great sign, and we're still within striking distance of this resistance, and it's essentially a triple top at this point. So tight range on Friday, daily inside bar, and the break of this daily range right here is going to be what's most important this coming week, and we'll see if the bulls are able to follow through. GWPH, another big name, certainly benefiting from the strength in the S&P 500, even more so in terms of the size of the bounce we've seen here. But again, we're not changing any weekly trends. To change the weekly trends, we're coming off of the low, so we're going to have to pull back at some point. Wrong thing. We're going to have to pull back at some point, form that higher low, and then change that trend with continuation. So it's a very solid bounce that has us anticipating the higher low will come when we do consolidate. There's no sign of consolidation at this point, and you can see the daily chart has just been a raging bull for the last month. So support is down at 119.28. Anything above that maintains daily higher lows. As long as the daily uptrend is maintained, we're not going to look for any weekly consolidation. So the next time we do pull back, we will anticipate another daily higher low is going to form from it. And the close at the high of the week is obviously a good sign as well. Next resistance that we're looking at is 138.82 and then 152.28. But again, that is a V-shaped recovery with a lot of weakness preceding it and then getting back a lot of that weakness in that month-long bounce. So just looking at this 3-week bounce, essentially taking back 7 weeks of red. Usually you see it in the other direction, but very powerful bounce. TRUL still responding well from a double whammy of news. So in the other video, I wasn't sure if the news reaction was just Florida, but there was news mixed in there as well with having to do with TRUL's shares. So we have a lower high pattern that's very clear on the weekly time frame with resistance, lower high, and anything under 1749 is a lower high, and it's very likely to form a lower high compared to that level just because, again, the distance we have to go to get to that resistance is roughly 25% or so, 20%, and we've already seen a very significant move at this point. So what the bulls are going to be looking for, if we cannot keep this momentum up, will be a lower high and then a higher low and then a trend change to get that strength and move looking at all-time highs if that were to play out. So on the daily time frame, obviously a very significant move, a couple gaps, a little bit overextended with multiple gaps in a row. So entries at this point are certainly not good risk to reward. Entering on consolidation is a different story. The support level on the daily is 1120. Anything above that keeps the higher lows. So that's a given that we're going to form a higher low next time we consolidate. When we lose the hourly uptrend, that's when we look for the daily consolidation. So the hourly uptrend at this point is the last higher low at the end of Friday, 1426, to keep the bulls fully in control. And then we would be looking down at 1367 and 1290 as the next two levels. So very strong response to that news. Again, for the major U.S. players, the names that we're keeping an eye on are MedMen, IAN now with this merger, TRUL with their presence in Florida, which is massive, and those are the top 3 that I'm watching. KSHB is another one that we're keeping a close eye on. So some of the same names that were highlighted in the intro to USMJ video, those names have responded well to this bounce the last month as the entire sector has. And now we're just going to patiently wait for the hype and change in the political system that's going to lead to a massive opportunity in terms of percentage gains in the US sometime in the next couple of years. ACRG, another one that we're watching for all-time high potential. We have resistance, all-time low, lower high was hit at 25.08, and now the bulls are trying to form a quick higher low and see continuation. This is very healthy weekly consolidation at this point. We pulled back down to 20.57. The bulls are hoping that's as far as we need to pull back, and the daily time frame is seeing healthy consolidation, but a lot of it. We can see the last 8 of the last 9 days have been red, but low volume, no significant pullback. So what we would need to see is the bulls hold 2057, form this little daily higher low, and then break this resistance. The top of this bounce attempt got to 2360. So breaking 2360 would give us a little daily higher low and continuation move. And we would then set our sights on 2508, 2508, and then all-time high is 2690. So keep an eye on ACRG as it is definitely within striking distance of that all-time high. GTII, weekly is a bearish reversal candlestick, so I want more details. Has the daily uptrend been lost yet on this bounce? And the answer is not yet, because we hadn't really established a daily higher low on the way up. It was just a straight shot. We had a little consolidation here, but didn't even really pull back enough to form a clear daily higher low. That's the only support nearby that's clear with a double low those 2 days at 1430. So 1430 is the first support that I'd be looking at. It's also a previous resistance zone, now support. So we're pulling back towards that level, and the bulls obviously want to keep a daily higher low and try and see continuation of this bull move. Resistance is the top of the move all the way up at 1824. So we can see there's a lot of swing in terms of percentages. Well, I'm charting a lot of these names on the CSE, and the reason for that is the dollar volume is so much more significant than the OTC names in the US. The OTC exchange does not have the same dollar volume that even the CSE does. So GTII, we've got 200,000 shares on Friday traded. Let's just say they were traded at an average of $16. So 3.2 million. And if you look at the US version, how many dollars were traded compared to that amount? And we're looking at 42,000 shares at about, 13 cents. So it doesn't even compare, which is why I'm looking at these CSE names. So in terms of the daily chart, bulls need to change the hourly trend to have the daily higher low established. And looking at the hourly chart at this point, we only have one bullish reversal candlestick. That hourly trend is not really close to changing at this point with a higher low and higher high, but keeping an eye out for that to give us the indication our new daily support level has been established. KSHB, significant dump, little weak bounce attempt. This is a potential bear flag. Volume dropping off substantially, so bulls want to be a little bit cautious here. 563 is a double top the past 2 days, and if we see a bear break of 533 on Tuesday, then we're going to be looking right back down towards the low of this dump of 549. So just looking at the weekly time frame here for KSHB, we would expect a higher low to hold compared to 437, but that volume is very concerning for the bulls overall, and we're going to have to see a daily trend change to change that and make it, comfortable for these bulls, because right now the possibility of further downside is certainly looming. So there's our support level of 533, and then looking down to 549 or 449 with the double top at 563. So 563 to 533 is the first range to be watching on Tuesday. And I'm keeping an eye on this one, scouting for the potential of a longer term entry, but also not the kind of thing that I'm going to try and time the bottom on. I want to wait till I'm sure the momentum is shifting back towards the bulls, because we certainly saw when the bulls have that momentum, they can run with it, but it was turned around very quickly. LHS, this is one still in a daily equilibrium. Absolutely worth watching for that case, for that reason. 72 is support, 113 resistance, 81 is a higher low, double top by 1.5 pennies. Another higher low just formed this week at 94 cents. So resistance is 104 and 114, and the bulls really want to hold 94 cents, because if that's lost, it's going to be clear that a little lower high and lower low on the daily is forming, and this weekly time frame will have not formed the higher low yet, as the bulls are currently hoping, and we'll have to pull back a bit more. So worth watching this tightening range and waiting patiently for this tightening range to break, noting that a volume spike will occur when we see breaks of tightening ranges. And right now we don't have any volume standing out, pretty low volume while we continue to tighten. CVSI, this is a good weekly equilibrium pattern to be watching. So it continues to tighten up, and we are going to see a break sometime probably within the next 3 weeks, I would say. So high, low, topped out at 654, higher low at 333, lower high 560, another higher low at 380, another lower high at 489. So right now the key range is 380 support, which we're trying to hold with a higher low, and 489 resistance, which if we break, we're going to be looking up at 560 after that. So things getting very tight. It's a little bit more clear on the weekly even than the daily chart. And right now, there are our key resistance levels and trying to form that higher low. If the bulls can follow through with the solid volume from Friday and see another green day on Tuesday, then this will be a new higher low and a key support level of 405. But we need a little bit more follow through first at this point to make that a clear pivot point where the bulls then showed up and defended that 405 support meaningfully. Keep an eye on that weekly pattern. It's going to be interesting to see that one play out. And last, we'll wrap it up with NBEV, big upper wick of profit taking on the weekly time frame. So I want to know, has the daily uptrend been lost from the last 4 weeks of bounce? And the answer is no, not yet, because we're still pulling back on declining volume. The last higher low was a long way away. It was down here at 499. So bulls have a lot of space to form this higher low. We're looking for a change in the hourly trend to indicate the daily higher low has been established. And at this point, the hourly trend needs to see a clear break of 659 to start to shift that momentum, with then 688 as a key little triple top of resistance there as well. So 688 is the most important short-term resistance for me. And as far as support goes, if we see a break of 632, that tells us the daily higher low has not been established yet, and we're still pulling back. At this point, we topped out at 762, and here we are $1 lower. So we've already pulled back well over 10%. So it's worth keeping an eye out for this hourly trend change on NBEV to be looking for a bit of a bounce on the daily time frame. The close of the low of the day on Friday certainly favors the bears with momentum, but keep an eye on that 632 level first thing this coming week. And if we can hold that and then shift that momentum back to the upper $6 range, that will be our daily higher low signal. So have a good rest of your weekend. Do some good things out there. We're going to continue watching this space. Certainly great consolidation right now. There's no red flags. The only red flags in this space are the individual names of KSHB in the US and ACB in Canada, just with, the significant red days we've seen recently compared to the rest of the sector. And the reason for that is news related and individual to the companies raising funds through potential dilution. So that is the reason for the bearish reaction. But obviously everything else is going just fine for this sector. No red flags, just healthy consolidation where we are pulling back and still watching the overall S&P 500 and oil, because as long as they remain strong as they have been, that's going to be a beneficial environment. And as I said in the other video, just a bit of an analogy in the Canadian MJ video, you can have the same seed, the same company, and put it in two different environments, either a greenhouse or outside in the cold tundra, and how that same seed is going to thrive in that environment is going to be completely different. So that environment is very important. And the environment in this case is the S&P 500 and the overall stock market health. So thanks again. We'll see you soon. No coughing this time.